The background and rationale of TPG Global's bid for InvoCare, a leading funeral services provider in Australia and New Zealand. InvoCare is the largest funeral services provider in Australia and New Zealand, operating national brands such as White Lady Funerals and Simplicity Funerals, as well as a host of state-based brands. The company has been facing challenges from increased competition, regulatory changes, and changing consumer preferences in the funeral industry. TPG Global is a U.S.-based private equity firm that has been investing in various sectors, including healthcare, technology, and consumer. TPG has a history of acquiring and transforming businesses in Australia, such as Healthscope, Alinta Energy, and Green Cross. On March 7, 2023, InvoCare announced that it had received a non-binding takeover offer from TPG Global for $1.81 billion Australian dollars, $1.22 billion, or $12.65 per share. This represented a 39.1% premium to InvoCare's closing price on March 6. TPG also disclosed that it owned 19.98% of InvoCare's shares. The rationale behind TPG's bid was to leverage its expertise and capital to help InvoCare grow its market share, improve its operational efficiency, and expand its digital capabilities. TPG also saw an opportunity to benefit from the long-term demographic trends of an aging population and rising death rates in Australia and New Zealand. However, on April 18, 2023, TPG withdrew its offer after conducting due diligence on InvoCare. TPG cited concerns over InvoCare's financial performance, valuation, and outlook amid the uncertain market conditions caused by the COVID-19 pandemic. InvoCare's shares plunged 15% on the news, as investors were disappointed by the loss of a potential takeover premium. InvoCare also reported a 9% decline in revenue and a 28% drop in net profit for the first quarter of 2023, compared to the same period in 2022. But the story did not end there. On May 15, 2023, InvoCare announced that it had received a revised bid from TPG Global for $1.86 billion Australian dollars, $1.26 billion, or 13 Australian dollars per share. This was slightly higher than TPG's previous offer and represented a 25% premium to InvoCare's closing price on May 14. The InvoCare board indicated that it would recommend the revised offer to its shareholders, subject to no superior proposal emerging, an independent expert's opinion, and other customary conditions. TPG also agreed to provide 5 weeks of exclusivity to InvoCare to finalize the deal. The revised bid came after InvoCare showed signs of recovery in its business performance, as COVID-19 restrictions eased and funeral volumes increased. InvoCare also announced several strategic initiatives to enhance its customer experience, optimize its network footprint, and accelerate its digital transformation. The revised bid also reflected TPG's confidence in InvoCare's long-term growth potential and competitive position in the funeral industry. TPG believed that it could add value to InvoCare by providing strategic guidance, operational support, and financial resources. The deal is expected to be completed by the end of June 2023, subject to shareholder and regulatory approvals. If successful, it will be one of the largest private equity transactions in Australia this year. In this section, we will discuss the details and implications of the revised offer of 13 Australian dollars per share, which is inclusive of a special dividend and represents a 17.2% premium to InvoCare's last closing price. As you may recall, InvoCare is Australia's largest funeral services provider, operating over 270 funeral locations and 16 cemeteries and crematoria across Australia, New Zealand, and Singapore. The company has been facing challenges due to the COVID-19 pandemic, which has reduced the number of deaths and funerals, as well as increased costs and regulatory restrictions. In April, TPG Global, a private equity firm with a 19.2% stake in InvoCare, made an indicative offer of $12 Australian dollars and 65 cents per share to acquire the remaining shares of the company. However, InvoCare rejected the offer and refused to grant TPG access to its books, saying it undervalued the company and its growth prospects. On May 15, InvoCare announced that it had received a higher offer from TPG of $13 per share, which is inclusive of a special dividend of up to about 60 Australian cents per share. This offer represents a 17.2% premium to InvoCare's last closing price of $11.09 on May 14, and values the company at $1.86 billion Australian dollars. InvoCare said it had agreed to provide TPG a chance to undertake a 5-week due diligence on an exclusive basis to deliver a binding offer. The company also said it intends to recommend shareholders vote in favor of TPG's latest offer if it becomes a binding deal. The revised offer from TPG reflects its confidence in InvoCare's long-term potential and its ability to overcome the short-term challenges posed by the pandemic. It also signals TPG's willingness to pay a higher price to secure control of the company and benefit from its dominant market position and diversified portfolio of brands and services. The implications of the revised offer for the funeral industry are mixed. On one hand, it could lead to more consolidation and competition in the sector, as TPG may seek to expand InvoCare's presence and scale in Australia and overseas. On the other hand, it could also create opportunities for smaller players and new entrants to gain market share and differentiate themselves from InvoCare's offerings. In conclusion, the revised offer from TPG is a significant development for InvoCare and its shareholders, as well as for the funeral industry as a whole. It remains to be seen whether TPG will succeed in acquiring InvoCare or whether another bidder will emerge to challenge its offer. The challenges and opportunities for InvoCare in the funeral industry. InvoCare is Australia's largest funeral and cremation service provider, with a portfolio of well-known brands such as White Lady Funerals, Simplicity Funerals, and Guardian Funerals. The company operates in a highly fragmented and competitive industry, where customer preferences and expectations are constantly evolving. In this section, we will explore some of the challenges and opportunities that InvoCare faces in the funeral industry, such as the impact of COVID-19, the changing consumer preferences, and the potential growth areas. One of the biggest challenges that InvoCare faced in 2022 was the volatility of mortality rates due to the COVID-19 pandemic. According to the Australian Bureau of Statistics, there were about 11% more deaths in 2022 than in 2021, mainly driven by COVID-19 fatalities. However, this also meant that there were spikes in funeral demand that exceeded InvoCare's capacity to service them. The company reported that it had to turn away some customers who wanted to book a specific date for a funeral, due to labor shortages and capacity constraints. This likely resulted in InvoCare losing some market share to smaller competitors who had more flexibility and availability. Another challenge that InvoCare faced was the inflationary pressure on its cost base, especially on caskets, consumables, and funeral disbursements. The company said that these costs increased by 14% in 2022 compared to 2021, adding $18 million to its expenses. Some of these costs were passed on to customers through higher prices, but this also affected InvoCare's profitability and margins. Despite these challenges, InvoCare also saw some opportunities to grow its business and improve its customer satisfaction. One of these opportunities was the rebound in revenue from full-service funerals after the removal of COVID-19 restrictions on gatherings. The company said that its average revenue per funeral case increased by 9% in 2022 compared to 2021, reflecting the higher demand for personalized and premium services. InvoCare also invested in enhancing its digital capabilities and online presence, to cater to customers who preferred to book and arrange funerals online. The company launched a new website and app for its Simplicity Funerals brand, which offers low-cost and simple funeral options. Another opportunity that InvoCare pursued was expanding its network of locations and facilities across Australia and New Zealand. The company completed several acquisitions and refurbishments of funeral homes, cemeteries, and crematoria in 2022, adding more than 3,000 funeral cases to its annual volume. InvoCare also continued to benefit from its prepaid funeral contracts, which provide a stable source of future revenue and cash flow. The company said that it had more than $600 million invested in property, shares, and cash from customers who opted to prepay for their funerals. In conclusion, InvoCare faced a challenging year in 2022 due to the COVID-19 pandemic and its impact on mortality rates, funeral demand, and costs. However, the company also seized some opportunities to grow its revenue, market share, and customer loyalty by offering a range of services and options that suit different needs and preferences. InvoCare remains a dominant player in the funeral industry, with a wide economic moat and competitive advantages over smaller rivals.